This is Drill Down Earnings. We've got a quick look at results from Oracle. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. I am dumbfounded. I am conflicted. Let's talk about Oracle for a minute here. I own the stock. I have friends there. I've done business with the company, so I'm completely biased here. Take that into account for everything I say. Don't believe anything I say. But when I look at the business story behind one stock on the move, what I've heard from this company for a long time is things were going better than the numbers, and then the numbers got good. And then we get a quarter like this. And I don't know when I've ever seen anything like this in scale, ever, except for maybe NVIDIA. I've always thought this is one of the 50 most important companies in technology. It remains that. But these Q1 2026 earnings, better than analyst estimates slightly, I guess. Earnings per share a little bit light, 14.93 billion in revenues. But when you look beyond this, there's all kinds of numbers to look at. Let's talk about the less important ones, not the jaw-dropping one. But earnings per share down a little bit, revenue up 12%, cloud revenue up 28%, infrastructure revenue up 55%, cloud applications up 11%, their Fusion Cloud up 17%, their NetSuite business is doing quite well, up 15% or 16%, I should say, on a year-over-year basis. But their operating margins, they're making lots and lots of money with all these sales, with 32% operating margins. But look, their remaining performance obligations, the contracts that they hold, they put out a stunning number last quarter, nearly $150 billion. This is for a company with barely $50 billion in revenue. They announced $455 billion in contracts in RPOs, remaining performance obligations, in their press release today and on their conference call today. I don't even know how to make sense of $500 billion, nearly $500 billion in orders. I say nearly $500 billion. It's 50 billion away from that, and yet we're talking about it being close to $500 billion. This is just amazing. This is all about AI. This company is becoming a purveyor of choice for building out data centers. And Larry Ellison, the Chief Technical Officer and founder, has been talking about this for the longest time, saying he's trying to standardize around certain constructs, that what you get in one Oracle data center is the same as you get in any Oracle data center, and they can do it small, and they can do it big, and they can do it fast. He's been talking about this for a couple of years now, and now we're seeing these orders. I mean, this is just, I don't know, the Johnson kids are happy. The Johnson family's happy. Let's talk about it a little bit more. The cloud business is in most of their revenues, 48% of revenues, software support and licensing at 38%, and there's some hardware, which is growing nicely, and some services business, which has, been pretty stable, which is actually a good sign. It means the stuff works. They don't have to get a ton of services business, unlike other companies that sell some software and sell a lot of services because the stuff doesn't work. The cloud business cranking, as I mentioned, 28% growth, now over $7 billion in quarterly revenue. And even the software licensing business up 1% to nearly $5 billion. Pretty steady business there. Slow and steady growth is winning there. And hardware growth, as I mentioned, is back up 2% on a year-over-year basis. But the cloud business breaking away from the other two big businesses of software and services at 28% growth. And they're spending a lot of money to do it. So capital expenditures, and Safra Catz, the CEO, talked about this on the conference call. When you see the CapEx number go up or down, because it's a negative number, it's an expense, when you see more CapEx, it's actually a good sign for Oracle, because they own this stuff really briefly. They build it, they put the CapEx in the books, and they turn it over to their customers, and it becomes revenues. And of course, we've seen with over 30% operating margins, lots of profits here. So CapEx growing, but that's a good thing, increased CapEx. And the stock went bonkers in after-hours trading. This is a stock that was at $100 18 months ago. Heck, it was at $120 or so in April. It was at about that 12 months ago. Trading up to $307, up 27% in after-hours trading after a 76% gain, 73% gain in the last year. This business is dominated by the growth in the cloud, and you can see it. And God bless him, it was 4 years ago. Larry Ellison and Safra Catz told us that this was where they're putting their bets, and that's where the growth was going to be. And now you can see it in this historic quarter from Oracle. CEO and Chief Technology Officer Larry Ellison was really excited, really plugged in, really on top of this. He had to be interrupted by analysts who wanted to give him compliments. I was not one of them, but Larry, the Johnson family thanks you here. I don't do stock advice, but this has been a really incredible story to see a great big company doing greater and bigger things than ever imaginable. Here's what Larry Ellison had to say on the conference call.
There's a huge amount of demand for inferencing. And if you think about it, in the end, all this money we're spending on training is going to have to be translated into products that are sold, which is all inferencing. And the inferencing market, again, is much larger than the training market. And yes, we are building, like everybody else, we're building agents with our applications. But we're doing much more than that. You know, no one's shown me a ChatGPT 3.5. Again, 3 years ago, a little less than 3 years ago, when ChatGPT amazed the world, and you could simply talk to your computer and ask questions and get well-reasoned, questions based on the latest and most precise information, as long as you ask those questions about publicly available data. And there's a lot of publicly available data. But if you combine the publicly available data with the enterprise data, which companies really don't want to share, you have to do it in such a way that your private enterprise data stays private, yet the large language model can still use it for reasoning, so as to answer your question, like how do the latest tariffs or the latest steel prices or whatever affect my quarterly results, affect my ability to deliver products, affect my revenue, affect my costs? Answer those kinds of questions. To answer those kind of questions, we had to change our database, fundamentally change our database, so you can vectorize all data. That's the form in which large language models understand information, is after it's been vectorized. And then allowing people to ask any question they want about anything. That's exactly what we've done.
Okay, Chief Technology Officer and Founder Larry Ellison. I want to get Safra Katz's short shrift as CEO, but we only did one quote. We usually only do one quote in this show, so why sully that with even more? But I'm going to see these people in Las Vegas at their Oracle AI World next month. But this is just amazing stuff to see. So what's your big takeaway, and what's the drill down earnings number, the one number that tells you a whole lot? I'll tell you that. But first, can you subscribe to this channel? If you'd like to watch these reports, we cover all the most important companies in technology here. We share some of our research that we do at Epistrophy Capital Research, but it helps us so much to get you subscribing. It's one simple click for you, but it's a big deal for us here at Epistrophy Capital Research. So, Oracle Q1 earnings, Q1 2026, a jaw-dropping result from this company. I'm biased. I own the stock. I've done some work with the company. I like the people there. But this quarter, it was a good quarter, sure. Growth up 12%. Nice operating profits at 30%. All their major business units growing a little or growing a lot. But their remaining performance obligations, the drill down earnings bite, the one number that tells you a whole lot, $455 billion in orders on hand. Maybe NVIDIA is the only time we've ever seen a company that's really big grow so fast after growing so fast. These are incredible results from Oracle. The stock is surging as a result. The Johnson family, which does not give financial advice, and this is not that. You see all my bad trades over the years. But this one has worked out well, and it's an incredible result, all driven by AI, the build out of data centers. Oracle's really delivering just as they said they would. All right, thanks for checking out Drill Down Earnings. If you like this, subscribe to us. Check me out at Cory TV on X, and of course on Instagram, TikTok, and yes, on YouTube at Drill Down Pod.